Imagine a world where artificial intelligence isn't just a buzzword, but a driving force reshaping entire industries. In 2025, Nasdaq has stepped into this future, leveraging AI to revolutionize financial markets, streamline initial public offerings, IPOs, and redefine compliance. By strategically integrating AI across three pivotal areas, market surveillance, IPO leadership, and FinTech innovation, Nasdaq has not only fortified its competitive edge, but also positioned itself as a long-term value driver for investors. But here's where it gets controversial. While Nasdaq's AI initiatives are undeniably impressive, some critics argue that the reliance on AI could lead to job displacement and ethical dilemmas. Let's dive deeper into these transformative changes and explore the implications for investors and the broader market. AI and market surveillance, redefining efficiency and integrity. Nasdaq's deployment of generative AI, Gen A, in its global market surveillance systems is a cornerstone of its AI strategy. By integrating Amazon Bedrock, the exchange has enabled surveillance analysts to distill, analyze, and interpret vast datasets in record time. During proof-of-concept testing, this AI functionality reduced investigation time for suspected market manipulation and insider dealing by 33%, while improving overall outcomes. The system automates tasks such as compiling regulatory filings, analyzing news sentiment, and generating contextual summaries, allowing analysts to focus on high-value decision-making. This innovation is critical in an era where high-frequency trading, HFT, and fragmented markets create complex, cross-asset manipulation schemes. The 2025 IOSCO review highlights AI as the next frontier in regulatory technology, and Nasdaq's proactive adoption aligns with this vision. For investors, this means a market infrastructure that is not only more resilient to abuse, but also faster and more scalable. Key attributes in a world where milliseconds determine market success. And this is the part most people miss. The true value of AI in market surveillance lies in its ability to predict and prevent fraudulent activities before they occur, rather than just reacting to them after the fact. IPO leadership. Powering the AI and tech boom, Nasdaq's dominance in the IPO market in 2025 is a direct result of its AI-driven infrastructure. In the first half of 2025 alone, the exchange welcomed 142 IPOs, raising $19.2 billion, surpassing the NYSE and European exchanges. This success is fueled by its ability to attract high-growth AI and tech firms, such as CoreWeave, a pure-play AI infrastructure provider, and ARM Holdings, a leader in power-efficient AI chips. The Agentic AI Workforce, launched in 2025, is a game-changer for banks and financial institutions. This suite of digital workers automates 80% of sanctions compliance tasks and streamlines enhanced due diligence (EDD) reviews, reducing operational costs and accelerating IPO readiness. Nasdaq's IPO Pulse Index, which has hit a 3-year high, signals robust investor confidence in its ecosystem. For investors, this translates to a pipeline of innovative companies poised to capitalize on AI-driven demand, with Nasdaq serving as the gateway. But here's a thought. While AI-driven IPOs are exciting, they also raise questions about the long-term sustainability of these companies. Are they truly innovative, or are they riding the AI hype train? FinTech solutions, driving compliance and ESG innovation beyond IPOs. Nasdaq's AI-powered fintech tools are transforming compliance and sustainability. The dynamic M-ELO order type, the first SEC-approved AI-driven order, optimizes trading efficiency, while Verafin's Entity Research Copilot automates financial crime investigations for 1,300-plus clients. Additionally, Nasdaq Sustainable Lens leverages AI to analyze unstructured ESG data, enabling firms to benchmark sustainability practices and meet regulatory demands. These solutions are not just incremental improvements, they represent a paradigm shift. By reducing false positives in AML investigations by 85% and enabling real-time ESG insights, Nasdaq is helping institutions navigate regulatory complexity while unlocking new revenue streams. And this is where the controversy lies. While AI can enhance compliance and sustainability, it also raises concerns about data privacy and security. How can we ensure that AI-driven solutions are used ethically and responsibly? Financial performance and strategic resilience. Nasdaq's Q2 2025 results underscore its AI-driven growth. Net revenue hit $1.3 billion, up 12% year-over-year, with market services revenue surging 21% to $306 million. The FinTech segment grew 10% to $464 million, driven by AI-enabled compliance tools. With a free cash flow of $1.73 billion and a disciplined capital allocation strategy, Nasdaq is well-positioned to reinvest in AI R&D and expand its leadership in digital assets and blockchain. This financial performance is a testament to Nasdaq's strategic foresight and its ability to adapt to the evolving tech ecosystem. But the question remains, can Nasdaq maintain this momentum in the face of increasing competition and regulatory challenges? Investment thesis, a long-term play on AI and innovation. For investors, Nasdaq represents a unique confluence of AI innovation, IPO leadership, and regulatory foresight. Its AI-driven infrastructure not only enhances market integrity, but also creates a flywheel effect, attracting high-growth companies, streamlining compliance, and scaling financial services. The 2025 IPO Pulse Index and the surge in AI-related filings suggest sustained momentum. But here's a final thought. While Nasdaq's AI initiatives are impressive, they also come with risks. Investors must weigh the potential benefits against the challenges and uncertainties that come with AI adoption. Actionable advice. 1. Allocate to Nasdaq-listed AI pure plays like CoreWeave and ARM Holdings, which are leveraging AI infrastructure demand. These companies are at the forefront of the AI revolution and are poised for significant growth. 2. Monitor Nasdaq's AI-driven fintech solutions, which are likely to gain traction as regulatory complexity increases. As more institutions adopt AI for compliance and sustainability, Nasdaq's fintech tools will become increasingly valuable. 3. Consider Nasdaq as a proxy for global tech innovation, given its role in facilitating AI, biotech, and green energy IPOs. By investing in Nasdaq, you're investing in the future of technology and innovation. In an era where AI is the new electricity, Nasdaq's strategic integration of this technology across its ecosystem is not just a competitive advantage, it's a blueprint for long-term value creation. Investors who recognize this early stand to benefit from a company that is not only adapting to the future, but actively shaping it. But what do you think? Is Nasdaq's AI strategy a game changer? Or are there hidden risks that investors should be aware of? Share your thoughts in the comments below.